Welcome to a short video on catastrophic health insurance, presented by Insurance Domain Training Center. Medical bills are one of the top causes of financial stress in the U.S. But what if you could protect yourself from worst-case costs at a fraction of the price? Let's understand what catastrophic health insurance is and the core objective behind it, especially for IT, BPO, and KPO professionals working with U.S. insurance concepts. Let's dive in.
Welcome to this explainer. Today we're unpacking a topic that literally acts as a vital financial shield for millions of people. We're looking specifically at catastrophic health insurance, a completely unique kind of safety net that's strictly designed for those absolute worst-case scenarios. Let's get right into it. So here's the big question. How do you actually protect yourself from medical bankruptcy when your monthly budget is already stretched to its absolute limit? It's an incredibly stressful puzzle, right? You might be perfectly healthy right now, feeling great, but you know that just one unexpected severe medical event, say a bad car accident or a sudden major diagnosis, could completely wipe out your hard-earned savings. We're talking about getting put into serious debt for years. Section 1. What is catastrophic health insurance? Let's break down the core concept. By definition, catastrophic health insurance is strictly coverage for very large, unexpected medical expenses. We are talking about severe illnesses or major injuries here. Let's be totally clear, this is not a day-to-day healthcare pass to cover your minor sniffles, a twisted ankle, or standard regular checkups. Instead, it's a laser-focused worst-case scenario safety net. Its one primary purpose? To prevent devastating financial ruin. That's the whole shebang. Section 2. Understanding the key trade-offs. Let's look at how the mechanics of this coverage actually balance risk and reward. The core dynamic of this entire setup comes down to one thing: high deductibles versus low premiums. It is a direct, inverse relationship. To get the massive benefit of paying incredibly low monthly premiums, which, let's be honest, is fantastic if you're on a super tight budget, you must agree to pay a very high out-of-pocket deductible first. Sometimes we're talking thousands of dollars. You basically have to cover the smaller routine stuff entirely by yourself before the insurance coverage ever actually kicks in. But here is exactly where the safety net deploys: the catastrophic cap. You can think of it kind of like an out-of-pocket maximum. Once you finally meet that really high deductible through your own spending, the plan hits its limit. And at that exact point, the insurance takes over entirely. It pays for the vast majority, or honestly even 100%, of your covered medical expenses for the rest of the calendar year. Now, you might be wondering what actually gets covered when you really need it. Under the U.S. Affordable Care Act, for example, these plans still absolutely guarantee 10 essential health benefits. That includes the big stuff like major hospitalization, emergency services, and prescription drugs. And surprisingly enough, they also cover certain preventative care, things like annual checkups and vaccines, often before you even hit that massive deductible. So it's not totally bare bones. Section 3. Who should choose this? Let's identify the ideal candidate for this specific financial structure. First off, keep the number 30 in your head. In the United States, under those Affordable Care Act rules, you generally need to be under 30 years old to even buy this specific type of coverage. If you are older than 30, well, you can only qualify if you receive a hardship exemption. That basically means you can prove you've suffered a severe financial blow, like homelessness, bankruptcy, or eviction that totally prevents you from affording standard insurance. More broadly speaking, though, the absolute ideal candidates are healthy individuals and families who simply want a worst-case safety net. If you're someone who rarely goes to the doctor, you don't take regular prescription medications, and you're just on a limited budget where you absolutely cannot afford comprehensive premiums, well, this bare-bones structure is practically tailor-made for you. Section 4. The plan in action. Let's ground all this theory with a real-world application. Consider this scenario for a second. A young, totally healthy adult with a catastrophic health plan is just going about their life, right? But suddenly, they experience a serious car accident. This emergency requires an ambulance ride, extensive surgery, and a multi-week hospitalization. Almost overnight, we are suddenly looking at astronomical medical bills, the kind of bills that could easily bankrupt someone. Okay, so here is how the insurance kicks in to actually save them. Step 1. The young adult has to pay their high out-of-pocket deductible first. It's a significant upfront cost, and yeah, that definitely stings. But look at step 2. Because that single massive hospital stay easily burns right through their deductible, they hit their catastrophic cap. Boom. The plan instantly stepped in to cover the remaining tens or even hundreds of thousands of dollars in hospital expenses. The patient takes a financial hit for sure, but they entirely avoid medical bankruptcy.
Which brings us to our final, really important thought. Does your budget actually match your health risks? I really want you to think about that. Weigh your own health status, your daily medical needs, and your personal risk tolerance against your current financial capabilities. Are you maybe paying too much every month for coverage you literally never use? Or on the flip side, are you dangerously unprotected if the absolute worst happens? Keep this safety net in mind as you evaluate your own financial health. Thanks so much for joining this explainer, and as always, keep learning.
Thank you for watching the Quick Bite series from www.insuedot.com. Please like and subscribe to our videos for you to get notification when we upload new videos.